I will just make a quick introduction and then we can kick off the conversation. Okay?
Sounds great.
Yeah, great. So welcome to tonight's panel discussion, Is the Digital Euro a Panacea for Today's Challenges? We are delighted to have so many of you joining us for this very current discussion. Only a few years ago, a central bank currency, the so-called CBDC, was seen as something exotic. Sweden's central bank was alone among high-income countries in exploring it. Now, official e-currencies have gone mainstream. The European Central Bank will soon decide whether to move ahead with the prep work to launch a digital euro. Here to discuss this complex project is Ralf Wintergerst from Giesecke & Devrient, Dr. Stefan Hoops from Deutsche Bank, and Michael de Castillo, a renowned journalist from Forbes. But before we jump into the debate, I would like you to consider becoming a member of United Europe and support our work. Our nonprofit association strives for a foremost competitive, diverse, and united Europe. Now I would like to give the floor to Michael to kickstart the debate. Michael, the floor is yours.
Thank you so much, Daria, and thanks to everyone for putting this together. It's a pleasure to be speaking with Ralf and Stefan for, as you very well introduced, an incredibly important subject. I tend to shy away from starting off events like this with defining terms. Because back in the days when we used to do events in person, you could see people's eyes gloss over. But I really think that we should, there's one thing I really want to distinguish before we go forward, because I think it's not intuitive and we need to really try and make it concrete in not only this audience's mind, but as many people in the world's minds as possible. So without putting too much pressure on Ralf and Stefan, I'd like to ask if you could start off, and if either one of you pick it up, and I'd love to hear an answer from both of you. What is the difference between a digital euro and the electronic money that we've had for generations? I mean, even the words are a little ambiguous, right? Like the digital is electronic, electronic is digital. So like we've had electronic money forever. I can't even remember the last time somebody gave me a physical paycheck. My paycheck has been electronic almost my entire life. So what is the difference between a digital euro and the electronic euro that has been around for generations?
Yeah. Stefan, how shall we kick it off? Should I pick it on first and then you maybe add?
Perfect. If you can do the nitty-gritty complex technical part, and then I will give from an economist perspective.
All right, let's try to do that. Well, if we talk about a digital currency, let's take the digital euro for a second, right? Although we not have that. And the money which is on our accounts or where we pay with a card. Currency is currency. Currency has a certain function. It is not just paying something or exchanging value. It is a store of value. It is a reference point for us that we can measure whether a price is okay or not. It is backed from a central bank. It is legally official. That is currency. And a digital euro, whether in physical form or in digital form, is exactly the same. It is being issued by a central bank. And the money we have on our accounts has been created somewhere, either through a physical form of currency or through a bank transfer. But this is what we use for making payments from here to there. So the money we have on our accounts is just for transferring it. And an official currency is something which is issued by a central bank. And there's a distinct difference, although it sounds a little artificial, but that's exactly the difference.
It's pretty impossible to add to that because it was like the perfect Wikipedia definition. Right, and I think it's a fairly theoretical concept to the point that Ralf made, but only cash is central bank backed, and what we deem money is to be more just the belief that it exists, meaning you just believe that somebody could actually convert it into cash, right? And that's really the difference between central bank money and commercial bank money. And so therefore, Michael, to answer your question, I think electronic payments, that's typically commercial bank money transferred electronically. And then you, of course, have the ability to convert it to cash, to central bank money, by going to an ATM and getting cash out. But the digital euro would be electronic, transferable electronically and central bank money.
And so I'm glad that Ralph mentioned that this doesn't exist yet. The distributed ledger enabled central bank issued euro does not exist yet. We are going to be talking about a lot of theoretical stuff. And in order to minimize the confusion about what is theoretical and what is possible and where we actually are, I just want to make very clear, where are we today? So is the European Central Bank currently exploring central bank digital currencies? Are they working with national central banks? Is it purely exploratory? Is it academic? Are they doing tests? Could you give us an idea of how real is this? And is this something that we should expect to happen in the next week or in the next 10 years?
Let's swap now, Stefan. I do the broader stuff and you do the detail.
Perfect.
Well, let's move away from Europe. I think the closest country coming to a digital currency is China at present. Because China announced that for the Winter Olympic Games in 2022, they will launch a formal digital Chinese currency. And that will be the first country moving very fast ahead, although Sweden started very early. In Europe, the ECB started a process to evaluate whether the public would like to have a digital currency, a digital euro, and if that's the case, how to proceed on that. So far, it's market research and evaluation of technologies. And it will take some time because also law has to change when you want to issue a digital format of the euro, that it can be issued. So timeframes will take some time in the future, maybe 3, 4, 5 years.
So Ralph is a very difficult act to follow because he's giving such specific, comprehensive answers. So the only thing to add, in addition to the official process by the ECB, which is what Ralph just pointed out, there's obviously many unofficial discussions on potential use cases. Could you use it for retail, for corporates? Could you use it to exchange securities and make settlement more efficient? So I think that the ECB is approaching it very officially yet pragmatically, which I think is going to be quite important because, in the end, people actually need to use it for it to be properly adopted. And again, unfortunately to Ralph's point, it would probably be in the early part of the second half of the 2020s. So 2025, 2026 would be my expectation. But a lot of good work is being done on that front.
Great. So now that we've defined a term and we've kind of caught the audience up on the reality / theoreticalness of what we're going to talk about, I want to get into the meat. And what I want to do I think the best way to do that is to go back in time a bit. Fortunately, you two gentlemen know each other and have worked together for a while. So I'd like to ask you to go back to the very beginning of the first time when you two sat down and talked CBDCs. What was the impetus that brought you two together talking about this?
I think it was use cases. So we had, so obviously when you think about what Ralph does, which is more the technical side, cybersecurity, obviously not being a financial institution, more the structure around it. And then our focus was more, what does it mean from a financial service perspective? But our approach really came from use cases. And it was when we discussed corporates and what corporates would need in order for machines to follow smart contracts and automatic payments and all of that. And that's then really how we started talking about central bank digital currencies, but it was client use cases.
So in a word or in 3 words, I think we could maybe sum that up: the Internet of Things. Can you maybe quickly, what is the Internet of Things, and how was it specifically that this idea led you to talking about central bank digital currencies?
Yeah, well, I think so far, typically in banking business, you have corporate deals, but typically we represent of who's spending money or not. In the Internet of Things world, also things have an identity. So it's cars, it's mobile phones, it's machines. And the more that those things get connected and have an identity, the more transactions they can do with one another. And that is probably one of the future aspects of how also payments can take place and business models can be reshaped. Because if things are connected and they can make a relation with each other based on algorithms, then the autonomous driving car can automatically go to a loading station. It's of course an electric car, and get the price negotiated with the loading station. And then through the algorithms, for example, of a DLT, a blockchain-based technology, that you can distribute the money to the station, to the owner, to those who lease it, or whatever. And that were the things we are talking about, because in the future we can foresee that companies producing machines, selling them to their customers, will have a more easy way in order to settle the payments on a pay-per-use model or something like this. So the Internet of Things is a future-oriented concept where everything is connected, and we have to make sure that things can be paid and settled and make everything is easy in the smart contract area.
Why is a CBDC necessary for that, though? I think for most of us, we're used to already buying things instantly. Like to us, it feels like money moves instantly. It feels like when I take my phone out and scan my QR code at the grocery store, that my money is immediately moving to that grocer. In fact, that's not really always the case. So I think that's maybe a good talking point about why CBDC is different than what we have today and how CBDCs might be essential to enabling this Internet of Things era you're talking about.
And that's super important, right? Because the question you're asking, Michael, is who cares? Who needs it? Right? And that's kind of like the question, meaning can you just, if you go back in time, currency was pretty clear. Like you travel to a country, you need to have the coins, the bills that you can use to pay in that country. That was fairly straightforward. I think the second you introduced credit cards and the ability to just use that, you actually didn't need to go to an ATM in another country to get cash out. So now that everything is already instant electronic, the question is, do central banks just compete on monetary policy, or also on the use cases and usability of what they produce?
Yeah, I think that's a good point, Stefan, because I think things were put in turmoil when cryptocurrencies came up. And cryptocurrencies actually is about use cases, because a Bitcoin is not like Ethereum, is not like Ripple. They all are a little different. Ethereum, for example, was a more, let's say, smart contract-based platform. And that were the use cases we were talking about some time back. But IOTA is more for a different use case. And the cryptocurrencies were bringing new dimensions in because they were specifically focused on certain areas of what can be improved if you use a different technology. And also that they at the same time provide a token which represent a value which can be then transferred. And that brought a big dynamic into the entire discussion of digital currency. And the central banks are reacting practically to the cryptocurrency scene because it's a digital currency competition.
And especially if I can just add to that, obviously what they've seen is Bitcoin and a bunch of other cryptocurrencies, but then there was the thesis of Facebook, what's now called Diem, which I think really got everybody going, because the thought that billions of people would essentially just trust each other and they wouldn't have to convert dollars into pound, into euro, into something different, but they would essentially just exchange one global currency. Yeah. I think that really got every central banker to, get concerned and focus on it.
Yeah, it was the first time that they had competition, right?
Yeah. Yes, exactly.
How might this benefit, or maybe rephrase that, like what are the risks to corporations if this doesn't happen? I want to make sure that we've made it really clear this concept of moving money and how slow it really is. It's misleading to us retail spenders that money moves quickly, when in fact, on a global scale, from bank to bank and from big corporation to big corporation, it can take 1 to 2 to 3 days, and in some bigger transactions, even much longer than that. And while I'm getting my product immediately, corporations and banks are sort of taking on a degree of risk. So can you talk to us a little bit about how a CBDC might decrease risk on a corporate side while these machines are talking to each other back to back and doing transactions that are settling or that are closing instantly, but maybe not settling for days or weeks later?
Do you want to start, or because
Stefan, why don't you go ahead and take that?
So I would unfortunately turn it around a bit, but then come back to your question. I think it's going to be difficult to explain to corporates that this is so much better than anything else, you have to use it. I don't think that was a starting position. I think the starting position was, imagine you did not have central banks, and imagine that you could not set interest rates and all the good things that central banks are doing, meaning you would lose the ability to, in addition to fiscal policy, have monetary policy. And that was the threat, meaning if people actually no longer needed central bank money, or then the commercial bank money, which is still aligned to one currency and therefore, kind of still influenceable. So imagine you had only Bitcoin or Diem. You would no longer be able to influence markets by setting interest rates. So therefore, I think that was the starting position. And I think what they now need to do is be competitive, meaning the use cases need to be the same. I think it's going to be, and Ralph is more creative, so maybe you can explain why CBDCs will be better than any cryptocurrency, but I think that's going to be tough. I think they will be safer, right? So they will always have the trust element, and then just need to be competing in user-friendliness.
Yeah. But intuitively, Stefan, I was also more on the side of the consumer first. Maybe let's come back. Is that okay, Michael, when we come back?
Yeah, please.
Because if I look at people around the world, what's the point, or what's the benefit of having a digital euro or a digital currency? Actually, we always come from our very nice infrastructures, Germany, United States, where you have a cash infrastructure, where you have an electronic infrastructure. There is so many people around the world who have no bank account and who have no ID. And the digital world is running very fast. And if you want to have all the people participating in the digital world, a digital currency could be a fast, a secure, a cost-free access to pay in the digital world. Because most people have a smartphone, but not most people have a bank account and also a digital ID. So how do we include those people financially? So that is one aspect why it could make sense. The second thing is, and that was one of the points the ECB figured out, is for most people in Europe, anonymity and security is key. Anonymity and security is key. If that's the case, then you want to create an instrument which is equal to cash, kind of anonym and secure. And if you have both things at hand, then of course a digital form of the physical currency can make a lot of sense for people all over the world, right? And whether it can be exchanged one another, I don't know. That's maybe a little bit too early to ask, but that's the benefit for the consumer. And that's the reason why it would make sense to offer a digital currency.
Do you see central bank digital currencies, specifically, we'll say a digital euro, as essentially a defensive move, or is this sort of an evolution of money where either companies or individuals are somehow going to have an improvement in some capacity?
I would guess it's a natural evolution, but I think there's also a risk point when central banks eventually miss that step, because the world is moving on. It's not standing still. If you look at the past 50 years, I think the strongest instrument the central banks had is the interest rate. In many countries, it's actually gone, which is also a problem for the commercial banks at the moment. So if that interest rate is gone for a long time, I think they have to move on and have to find instruments how they modernize their infrastructure and their instruments. And if the digital world runs so fast as in the past 10, 15, 20 years, then of course offering an equivalent makes sense from an offering standpoint for central banks.
fully agree. And so,
go ahead, Stefan.
if you wanted to have a question on what Ralph just said, then maybe.
Well, yeah, I'm curious. I think another way to answer this question, is it a defensive move or is it an evolution? Might be to ask, why is China doing it? What is the geopolitical motivation for China? And if they have that motivation, why shouldn't Europe have that motivation, or why shouldn't the United States have that motivation? What's the dynamic here that's motivating China to do this in the first place? If it's not because it's going to be a better experience for their citizens, if it's not because it's somehow going to improve corporate processes, what is their motivation, or is it maybe for the first two?
Well, Stefan, I think it's a tricky question to answer, right? Because to respond to an ambition a government has, but how I perceive the Chinese, that they have a very strong ambition to demonstrate that they can move things, and they have done that for the past 4 or 5 decades. And they have a very strong ambition. They're very close to technology, and they go through these different use cases also with their digital currency in their large cities. They test it out and they try it out, and they build a completely new ecosystem for payments. Also for person-to-machine payment and for person-to-person payment, for machine-to-machine payment, and digital currency is one of that instruments. So I think for the rest of the world, of course, somehow it becomes a consideration whether they want to move along that path as well, because potentially that currency, the Chinese currency, can take over a more important role if it has different forms of how it's being distributed. So eventually, back to your question, eventually it's a reactive part, and we speak to almost all central banks around the world. 80% of all central banks in the world think of digital currency at this moment as we speak.
And look, just to add to that, when you think about the key themes of the European Commission and them saying that to ensure that payments become more euro denominated than dollar denominated, and ensuring that, I would imagine that China had similar considerations. Right? When you think about what payments are, and Ralph made the explanation in the beginning that you kind of can store value, you can transfer value from A to B, then payments was always a utility, kind of like an afterthought. Like you would get stuff from A to B and the payment would just follow. But I think what you've seen over the last 10 years or so is that payments really became a geopolitical tool. And if you want to have sovereignty over that, then you need to also be innovative in use cases for your currency, right? And I would imagine that was also part of the consideration.
Yeah,
so I want to talk a little bit about the historic role of governments in laying foundation for private sector innovation. Specifically, I think my favorite example is always space exploration. I think the internet, though, is another good example where government agencies around the world invested tons of money to lay the foundation for what is now the internet and for what is now space exploration, which are largely private endeavors. The infrastructure of the internet is not run by the government anymore, and space exploration, though it's heavily funded by governments, is actually a competitive endeavor between private companies. I think that we see the beginning of this process possibly happening in the banking sector with something called stable coins. Stable coins are essentially CBDCs, but they're issued by the private sector. They're really simply put, these big companies and big consortia of companies are storing a bunch of traditional electronic money in accounts, tokenizing it, and then putting it out into the world. And these stable coins are already achieving multiple billions of dollars of market caps. So perhaps another tough question. I have this one marked down for Stefan, because I think we talked about it a bit earlier, but I'd love for Ralph to interject if you'd like. Does it matter if we're spending a stable coin issued by the private sector or a CBDC issued by a central bank?
Or a cryptocurrency which is not collateralized with something perceived
Fabulous. You added the third part. Thank you. So yeah, but great.
Up, right?
What does it matter? Yeah, wonderful.
And the point you made earlier about evolution, I think that's the key here, right? So when you think about what Bitcoin is, I think Bitcoin may be a storage of value. It's an asset, you can invest in it. I think at the current volatility, it's difficult to see how you'd use it for day-to-day payments, and it's difficult to break down in small portions and exchange and so on. So therefore, the use case for it as a payment, except for electronic vehicles manufactured by a certain company, is probably somewhat limited. Now, stablecoin would still be not central bank denominated, but would be stable, right? So in that sense, it would have similar, the uniqueness and all of the advantages of a cryptocurrency. But at least you have the idea that you could always convert it into something that you're sort of used to. But it's still not backed by the government, right? It's still commercial bank money. And obviously then CBDC would be all of that and backed by the government.
Ralph,
I'll
spin that to you.
Sorry, that was a pretty boring answer.
No,
right?
that was great. Thank you, Stefan. Ralph, why not just let the private sector create stable coins and let the central bank keep doing what it's doing?
I think if I take my opinion out and look at what's happening, is that it took governments a long time to create a currency system which somehow is stable and accepted and trusted. I think trust and confidence is very important. And there's a neighbor to that. That's the national identities. And then the internet came up, the World Wide Web came up and spoiled it all, because now everybody of us has tons of digital identities and has several options to pay digitally, and eventually has cryptocurrencies to pay too. And that's a race, trying to control from the bottom and trying to pull it away from the top. And the big technology giants, as Stefan explained, I think they try to take it away and make a business out of it. I think both can work. I'm not sure where it ends, because there's different philosophies. If you look at China, I think for sure the government wants to control it. If I look at the United States, it's a completely different behavior pattern. And somehow Europe in the middle struggles of how to protect the people, how to protect the data, and how to keep somehow control over the currency and the identities before it's being taken away. Why? Because the data are not here, digital sovereignty. So I think depending on how that race goes, the endpoint will be determined.
I think it's important to note that the answers to these questions are rightly difficult. We don't have a lot of them. The problems are being understood and explored as we speak. I do want to take the opportunity to switch gears just a little bit here, Ralph. I know that you're incredibly passionate about privacy. Stefan, we had a chance to speak briefly earlier this week, and I got some similar sentiments from you on this. We've talked about the idea of giving objects identities and how that can enable an Internet of Things where objects are sending money directly to each other. And Ralph, you sort of started to tease the idea of how the internet itself has kind of destroyed a lot of our sense of privacy, and how we are asked to reveal so much about ourselves to do very, very basic things. I want to ask two questions at the same time. First of all, how is it that CBDCs might be used, well, no, we'll do one first. So how the CBDCs might be used to invade our privacy, and how is it that CBDCs counterintuitively might actually create a world where we have more privacy?
Okay, that's tough questions. So where to start? I think maybe first to privacy. I think the entire internet and how we show up, I see it from a different lens, because in our company, I'm also responsible for security, also for information security. And there's a principle, it's kind of an onion, right? Because in the middle, you have the crown jewels and you want to protect them, right? And you not want to give it to anybody else. That's customer data and stuff like this. And personally, for me, that's the same. I also have crown jewels privately. So do I want to share them with everyone? No, of course not, right? And of course, many people ask for your data and you have to prove these and that. Yeah, okay, for certain functions that maybe is okay. But for many things, I say, well, I want to take care of my own data and I want to have it protected and I want not have 20,000 profiles in the internet spread. So a digital currency can be designed that you can keep your privacy, that you make payments without a trace. And that could be a benefit because it's the same with physical currency. Of course, always the objections come, oh, it's used for crime or for tax evasion. Well, I assume most people are okay. A fraction is not okay. And that's the reason why you have to make protection shields for the crown jewels. But generally, having a payment mechanism which helps to protect your privacy in form of a digital currency is a good thing from my perspective. I'm not sure whether I hit your questions, but I maybe stop here.
Yeah, I have a follow-up, but first, Stefan, is there anything that you want to add?
I almost wanted to ask you a question because when you think about privacy, the question is, are you okay with people knowing that you exist? You just don't want people to know what you're doing? I mean, you kind of want to hide what you buy, do, or whatever? Or do you also want to remain completely anonymous, right? Or are you actually okay for people to know that you exist, that you do certain things because you corporation, in a certain industry, but kind of like the crown jewels, like, the secret sauce, that is something that you want to keep private?
Well, since you asked a reporter a question, I'll go ahead and give you an answer, but I don't normally. I'm okay with people knowing I exist. But I do also believe, especially as not only a reporter, but an American reporter, that we've seen how people can use the fact that we exist in ways that we never anticipated. And I'm thinking specifically about Facebook and the role that it ended up playing in our elections. I actually don't currently use Facebook. I actually have 0 friends on my Facebook account. And I have said that I won't use it until someone has created a way for me to own my own identity on a social network. So I do believe that the technology is not only a possible problem but a possible solution. And to turn it back around on you guys. There's 2 words that I think we haven't talked about yet when we're talking about the difference between electronic money and digital money. And this is the concept of programmable money. All right. I think it's fascinating. Ralph said something that we could really easily trip over, which is, or not trip over, but ignore, which is that it can be designed. Right. Like this idea that money can be designed is relatively new. Like it was, in past years, money was something that you'd get a fancier machine, you print more intricate watermarks, you'd maybe insert some magnetic strips, but that was the same paper money. The idea that money can be designed, the idea that maybe you could have anonymity up until a certain point, and then if you do a big transaction, you have to disclose part of who you are. Or like the idea that you might have privacy for some purchases, like if I buy a stick of gum, but not for other purchases, like if I buy a gun. Like the idea that money can be designed and that smart contracts can be written into it is new to us. So to sort of turn that question back, and I will now introduce that second question. So like, first of all, how can CBDCs help ensure that we remain private if we are operating underneath the assumption that China is doing this because they don't want privacy? How can others do it in a way that preserves privacy? And where does cash fit in all of this?
I'm happy to start, Ralph. And I also want to go back to programmable money afterwards and think about what if you actually programmed it to only be usable for a certain purpose, right? So imagine, I have 3 daughters. Imagine I could say, like, here's your pocket money, but you cannot use it for candy, but I can actually program it in a way that it can only be used for a certain purpose, right? Which could also be, it cannot be used for anything which is not ESG compliant, or it cannot be used to purchase guns. But maybe it's, coming back to your question, I think so for me, it's difficult to see how you can have full, like how you can remain completely anonymous, meaning how central banks will allow anybody to use it for anything without doing anti-money laundering or know your client, some sort of identification. That I just don't think will happen. Like with the current focus on money laundering and finding crooks and getting that out of the system, it's difficult to see how CBDCs would actually create more privacy, because to some extent we want to have privacy for honest people, but not for anybody, right? So therefore, and I don't think that's been well defined as one of those things currently being explored, but I could see a situation which, as long as you remain known and we know that you are Michael, then what you do can remain invisible, but probably not both.
Yeah. Actually, I would distinguish between two things. One is the programmable part, because if we today transfer our monthly rent to the landlord, it is also an automatic program because it's from your bank account to the landlord. That's a very easy and simple form. When you have smart contracts, which are probably very complex, you put an algorithm and a formula behind. That makes absolute sense. But it can be made on a stable currency that you can split the payments into different buckets and you put the algorithms behind. For an official currency, I would take the programmable part partly out, because I think it doesn't make sense. And it's not helpful, because we want to have reliability and trust in that system that the value I see here is the value I see and nothing else. And that trust can be made if it is stable, if there's an institution behind you can trust, and so on and so forth. But those two things I would separate. So therefore I would put, let's say, take again the digital euro in place. You have the opportunity of paying anonym, but if you maybe reach certain thresholds, you take your mobile phone, you take your, let's say, national ID, and you make a transfer with your ID and you identify yourself if it exceeds a certain threshold. So therefore you can put in certain things whilst keeping the option of making secure and anonymous payment. Because you're not going to open the door for everything, right? That you can put hundreds and millions and hundreds of millions being transferred through mobile phones from one country to another country. So you keep certain regulations in place, and you can do that with the digital euro. And actually, I know that because we are developing such a technology.
Tell us a little bit about that.
When you imagine how that digital euro system looks like, you have to imagine how a physical system looks like. It's not the same, but take it more as a comparison. You need a digital factory for producing a digital euro. You need a distribution system, you need the protocols for that. We foresee a system where commercial banks play a role, and where not everything is central, sitting in one central bank and everybody has an account there. We don't see a sense there, because we have one risk at one place, right? So we are developing a system where you can produce it, where you can circulate it, where you can have certain control mechanisms, and where you have checkpoints, whether it's a genuine transfer or not. And you can add, depending on the thresholds, your ID when the amount is getting higher. And below that amount, you can pay anonymous and there is no trace.
Are you developing this software? Are you developing the software because you see a world where digital cash is going to disappear? Or does this do they coexist?
Okay, yeah, well, there's something fascinating about cash, because last year in the Corona pandemic, there was a 20% rise in demand, believe it or not. It's different from country to country and from region to region, but there is country which simply depend on physical currency. It will take a long time until it disappears. First point. Second point is, just imagine that everything is digital and somebody pulls the power plug and digital doesn't work. We need something we can rely on also in crisis times. We have seen that when there was Hurricane Katrina in North America, 9/11, when there were turmoils in the Ukraine, then cash is demanded. And I think those situations will appear over and over. So we must have something where we can fall back upon. So I'm not sure whether it's whose idea it is to, let's say, take cash out. I think it's not a good idea, simply to have something to fall back. But clearly speaking, digital will take over more and more. I think there's no doubt about that. And we see more and more digital applications for payment. And I'm 100% sure that we are seeing more digital currencies issued by central banks in the near future.
So, yeah, please, Stefan.
So just quickly to add to that, and I also come back to a comment you made earlier about, if I go to a store and I pay and, it's instant, it's automatic. There's actually a fairly gigantic difference between whether you pay with a bill, like with physical cash, or with a credit card, even though it sort of feels the same, right? Because if you pay with your credit card, there are fairly complex rails behind it. I mean, you will have a bank account, you will have chosen a credit card provider, they will have given you a certain limit. When you use your credit card, there's a signal saying, well, check the limit. Then the store owner, they will have an account at a bank and they will take receipt of that payment, but the rails behind it are fairly complex. So it feels like you pay for it, but what's actually happening, what could also theoretically go wrong, is fairly complex. So I think the point that Ralph just made, and I'm massively oversimplifying, but to take steps out and make that transfer of value essentially less error prone, I think it's a relevant use case.
Great, thank you so much for that. Also to you, Stefan, we wrapped up our conversation yesterday, 2 days ago, talking about bank runs. I think this is a fascinating idea. I think back to, in the build up to the Great Depression, I don't know what it was like in Europe, but, in the US, we're taught about it in history classes. Like you imagine a bank, there's a half dozen tellers there. Each teller has a line of 500 people out the door, around the corner, waiting to take all their money out. Physical space and human ability slowed down that bank run to a degree, right? Like you could only take so much cash out and keep it in your wallet or under your mattress. In a central bank digital currency world, where we basically have digital equivalents of cash that we can store in digital wallets that we ourselves own and manage, are we putting ourselves at risk of massive bank runs where over the course of 2 minutes, 2 million people could line up and remove money from their bank accounts? Is there concerns about giant bank runs in a central bank digital currency enabled world?
So I don't think so, but it would be like an interesting theoretical discussion of what it would look like, right? And 2 days ago, when we discussed what it could look like, and we kind of picture what a bank run in the digital world would look like, that was obviously interesting consideration. Now, when you think about the current setup, simplifying, roughly 10% of money is actually central bank money, meaning cash, and 90% is, roughly speaking, commercial bank money, meaning it sort of exists because you assume you could convert back. So I think a bank run would probably mean that you do not trust the bank that they can actually ever convert it, and you just don't trust the ones and zeros on your bank account statement, but you actually want to have it. And then the question is if obviously overnight 100% of the 90% which was supposed to be converted, it would be physically impossible because not enough cash exists. Yeah. Now, picture central bank digital currencies. I think right now, at least the ECB, I think they're thinking about certain caps per person. But of course, theoretically, in a crisis situation, maybe they can basically say, well, you can exceed your threshold, your cap, but at a cost. Right? Then you might have like negative interest or something. So I think it's conceivable. But then roughly speaking, for 100% of consumers and corporates and public sector to convert it overnight, that's still something which is, I think, reasonably unlikely that you would run out of central bank cash.
Another fascinating example of programmable money that you just gave there. Thank you for that. Now, moving on, keeping the attention on you, Stefan, though. So in the early days of Bitcoin, and I've been around for a while, actually October will be my 10-year anniversary of my first Bitcoin article. There was a lot of talk about how Bitcoin was going to kill banks. Like the early adopters were very anti-bank. Some of the early adopters were also very pro buying illicit goods, but that's a different story. But there was this ethos that like banks were going to go away. I think that has largely fallen to the wayside in many mainstream conversations. As we see institutions making it easier for their clients to buy Bitcoin and to hold it as an investment vehicle, the possibility that that banks might disappear is kind of going off into the fringes. But no doubt, it's already changed what banks do. And so I'd love to ask, like, in a future where central banks issue digital currency, and maybe that difference between commercial money and retail money starts to blur a bit, what role do you see banks playing? Like, how is a central bank digital currency going to change future responsibilities of banks?
It's a good question that I should have anticipated, meaning just challenging me whether I actually am needed in the future. I think so when you think about what a bank does in addition to providing advice on investments and whatever, right? But I think if you just break it down into fairly basic functions, we, to some extent, function like a time machine in the sense that we can give you something value today that you will repay over time, right? You want to buy a house, take out a mortgage, that's kind of time machine, right? Like you promise to pay it back over the next 20 years, but I give you value today. Now, that value needs to come from somebody, and that's people leaving deposits with me, right? I mean, and I think that function is not going to disappear. I mean, somebody will still need to allow you to store value for the future or consume today and promise to repay. And so therefore, I think when you think about cryptocurrencies, Bitcoin, I think the idea was to simplify payments or maybe make it convenient, take out fees, whatever. That will always happen. And I think that's sort of encouragement for us to become more efficient. That is fine. I think if you still break it down into basic functions, that will always exist. The question is simply, is it going to be digital currencies, cash that we take? Do we take cash, convert it into commercial bank money? But again, that's then nuances, but I think the basic functions will stay the same.
So we talked about being mindful of time. I want to make sure we get through 3 or 4 final questions here. So one of the most interesting possible futures that I think we could live in is a world where my favorite example is, I go to a farm or a baker in Nebraska, and I buy a loaf of bread. Will I have the option to choose to spend Bitcoin, dollars, euros, or renminbi? Will these CBDCs be as borderless as Bitcoin is, or will there be geofencing or other programs written into the money that sort of restricts where it can be spent?
Wow, it's an interesting picture that you actually draw here. But for sure, if there is a digital currency being issued by a central bank, there will be a must for retailers to accept that from their consumers, because it wouldn't work without. So whether you have physical cash or a digital euro, they have to accept that. Whether they accept different currencies from China or from whatever country, that's a completely separate question. And I think that will be solved through regulation. I guess maybe through algorithms you can exchange that very fast, but that is another step to take. I think first step is have a digital currency, make it accepted, because you also have to decide on the infrastructure where it's being accepted, right? And of course, you not want to add another rail, because then you have 5 terminals at each baker, right? Bakery, and they will go mad if that happens.
Well, and just
I think first things first.
Sorry, just to add to that, I think it depends on the level of competition that the shop owner has. Mm-hmm. So the reason why you can pay with WeChat Pay in the US or in Europe is because shops understood that you have tourists that want to purchase goods, and you wanted to make convenient for them, right? So in Nebraska, I think my answer would be, if there's one bakery in that city, if they want to be paid in dollars cash, well, if you're hungry, I guess that's what we're going to be using. If there's going to be a mall and you want to buy sneakers and there are multiple stores, well, then maybe they will actually compete in what sort of value acceptance they will tolerate.
Yeah, I like the idea, Stefan, that maybe is also a question or function of competition of countries and governments, because if a country is maybe not in such a good position, then they maybe accept everything what's coming in and they don't care, because their competitive position is differently, whilst the stronger nations eventually say, well, only my own national currency and everything else go for an exchange shop.
So I definitely want to talk about competition to sort of wrap things up a bit here. I mean, the idea that I painted of, or the picture that I painted of a single wallet with Bitcoin, dollars, renminbi, and euros in it that might be spendable anywhere in the world is an inherently competitive image, because you have to incentivize the people with that money in their wallet to pick one currency or the other. How are CBDCs going to change the nature of competition in banking and in money? In the crypto world, there's a philosopher, you probably know Hayek, who's famous for the idea of a free market of competing currencies, and how central banks that do a poor job managing their citizens' reserves are able to do a poor job because they can force their citizens to only spend that money. In a central bank digital currency enabled world, in a Bitcoin enabled world, in a cryptocurrency enabled world, who are the new competitors? Are central banks now going to be competing against each other? Are central banks going to be competing against Facebook? Are central banks going to be competing against cryptocurrency, or none of the above?
Well, it's interesting that that's at least a valid question to ask, which I think 10 years ago they wouldn't have thought about it. And the discussion that I tried to start on LinkedIn, imagine you're the CEO of the digital euro, which kind of implies you are in competition. How do you compete against whom? I think it is all of the above, right? I think that, again, I see that DM was probably the most realistic, because you would have many, many consumers. And I think Ralph made the excellent point earlier about financial inclusion. But you have many people in many countries that just won't have a bank account, but they will have a Facebook account and could just accept that as a means of value transfer. Again, I think all of those considerations central banks will have to keep in mind if they still want to be relevant in setting monetary policy for their jurisdiction.
Yeah. Well, I think if you look at the situation so far where we stand today, then I would guess that the cryptocurrencies are not competition to the national currencies, because they have failed to become a more common means of payment for paying your daily goods. And I think as long as the rates change so dramatically as the Bitcoin or Ethereum over the past few months, I think nobody will use it for common purposes, for paying. I think that's, so far, cryptocurrencies have failed. I think there will be new schemes coming up, because it's more thoughtful now. The stablecoin approach, which you mentioned earlier, I think it's one of those who could be successful. So competing currencies is a realistic picture as long as the policymakers allow that. It's the same question on the digital identity area. I know that for sure, that there's a big fight of how that actually comes together or not.
So I could ask follow-ups all day, but I won't, because there's some final things I want to make sure that we get to. So how I want to, there's a balance here that I think we need to talk about, which is how do we allay the concerns that we're being tracked by totalitarian repressive government regimes with proving that we've done KYC with otherwise benign governments. Some people are terrified of the government. Some people love their government. Regulatory requirements don't seem to change. I think we pretty much all have to prove our KYC and our AML. But how can we strike that balance between assuring that the money that we spend every day isn't being, tracked on a stick of gum basis while still also proving that we've done our KYC and AML.
So anybody out there that has an awesome answer to that, shoot me a note directly, because that's what I'm spending a lot of time on. So look, to some extent, the problem is that you assume that, you know, all of us are sort of honest, and amongst honest people, why would we want to be traced? The problem is that not everybody is honest. And obviously, I think all of us have a legitimate interest to then sort out the bad apples, right, the crooks. And I think what so far banks, you know, are like doing delegated by you know, public sector and by authorities, is to help find crooks. And that's, you know, money laundering, meaning if somebody's a crook, has been identified, is in jail, they're not going to wire money unless they're identified, or until they're identified, they can still launder money. And that's something that, you know, we help authorities to identify. Now, obviously, in a Bitcoin world, in a cryptocurrency world, that's going to be much more anonymous. And I think central bank digital currencies will definitely, and that I'm certain of, will not allow their money to just be used by anybody for any purpose. And either they will have to do AML themselves, or still delegate it to somebody, which could be banks.
So I want to wrap things up. I'm going to ask all of my last questions at the same time, and then I'm just going to let you guys talk until we get kicked out. So we're switching gears. We're talking geopolitics. All right, we're gonna go up to the macro here. Look at the biggest possible pictures. The first macro I want to look at is Europe. How disruptive will a digital euro be to the current system? And then I want to go and look even bigger at a global scale. And talk about the relationship that we've been sort of teasing between the Chinese renminbi, the US dollar, the euro, and whether or not this might play in some way to the European Commission's bigger picture plans for the future. How disruptive will it be to the euro? What's the relationship between the renminbi, the dollar, and the euro going forward? And any thoughts on the European Commission's Alliance for the Free World, et cetera?
Ralph, should I start and then you have the conclusion? Maybe you go back and forth. So firstly, I think to the first question, I think it would be disruptive to not have a digital euro. And so therefore, to some extent, you asked the question earlier, is that proactive, defensive? To some extent, you need to retain monetary authority, and therefore you just need to create something, similar use cases, but that you still control. So therefore, I think it's going to be less disruptive if we have it. Second question, I think on geopolitics, yes, if you view payments as a geopolitical tool that somebody else can block as long as it's in their currency, then of course you want to have sovereignty, and you need to have people actually adopt your currency. So therefore, to some extent, you know, you mentioned, you know, China, Euro, US. To some extent, they do compete for creating use cases fast. And, you know, I'm with Ralph that China is probably going to be ready next year, which would give them 3, 4, 5 years head start versus Euro probably. That's 4 or 5 years of getting people to adopt that, which I think is a massive advantage. And then the more difficult other geopolitical questions, I let the CEO answer.
No pressure, Ralph.
Well, I would probably not respond to disruption, but rather to, I think when the digital euro comes, it will be a trustworthy digital currency, because I think in the EU, there's a lot of care being taken on privacy, on data protection and stuff like this. So therefore, I think it will be something you can trust upon. However, it shouldn't take too long, because 1 year in the digital age, it's going much faster than in the normal businesses. So with China being ahead, I would rather like to see Europe and also United States running, right? But the digital euro would be a trustworthy digital currency. That's what I would 100% believe. Time is of essence. All these currencies will play a major role in the world because China is still on the way up. So, but China will have a different concept to its digital currency. So we have to see that we have the right complementary parts of digital currencies in North America and in Europe. And I believe that Europe will be on the trust side ahead, eventually also of the United States, definitely ahead of China. And North America will have a very big potential because US dollar still is the leading currency. So having a digital dollar would be a tremendous potential for the United States. I have not 100% responded, but that would be my response.
Thank you so much. So just to, I want to just make sure that we recognize we're hosted today by United Europe and the European Commission's Alliance of the Free World is an increasingly important organization. Do you see digital currencies as an important component of the European Commission's digital strategy going forward? Are they there yet? Are they doing it now? Is it going to happen in the future? Or have they just completely given up on this?
The last point I would completely disagree. I think there's no giving up. It is more that you have to coordinate all the countries. That's the reason why it sometimes takes a little longer than it should, frankly speaking. But I think for the progress of Europe, it's a very important project. And for the status of Europe, it's also an image project, right? And politicians should want that project, but need to be convinced too. Capability-wise, we are in a very good position here.
And the only tiny thing to add, I think Europe has, generally speaking, been pretty good in setting standards. So when you think, in many instances across industries, the European standard is then adopted globally because it's easier for companies to just produce once. And data standards was one case in point. But Europe is not normally good in just trying stuff out and see how it goes, right? So therefore, I think in this case, I would definitely encourage a little bit of a sandboxing approach, where you maybe just try certain things to see what it feels like before you set a standard which is going to be perfect forever. Right? But a lot of focus on it.
I think that's a fabulous note to end it on. Gentlemen, I thank you both so much for sharing your thoughts and your expertise and your opinions, and to United Europe for hosting us. If you do have any questions, you want to follow up, connect with me on social media. I'm on Twitter at DelRayman, DelRayman. Gentlemen, looking forward to continuing to tell your story. I've written about each of your companies, and I know you're going to be doing exciting stuff in the future. So let's keep the conversation going, and I'm looking forward to see what a future enabled by CBDCs will look like. Thank you to everyone, and thanks to the audience for joining us.
Thank you, everyone.
Thank
Thank
you.
you, distinguished speakers. Thank you.
With so many great comments.
If you still have time to answer those questions, I'm sure the audience would appreciate. If you see something standing out you would like to get into, please feel free.
That's a very long list. And
yeah, there were a lot of comments, few questions. I was kind of watching as we were going. I didn't see any questions jump out.
And I seem to be in the wrong system because I see 2 questions but no comments. So therefore,
oh, really? You see?
I'm answering everything that I see, which is nothing. So therefore, I feel good about my transparency. The 2 things that I see just really quickly is by somebody who doesn't want to be disclosed and wants to understand whether the Chinese digital currency could be used as part of the Belt and Road Initiative. And what I can say that if I was the CEO of the Chinese CBDC, yes, I would encourage the use for things that I'm supporting fiscally. I think the other question I see by Dirk Srokke on, who is actually okay with his, not being private, on traditional banks being challenged by decentralized finance, open finance, for sure being challenged, for sure being disrupted, which is why it's important to actually engage. Right? I think the worst that banks could do, generally speaking, would just say like, this is bad. Let's just hope that regulation will protect us. That ain't going to happen. So therefore, it will definitely be hugely disruptive and transformational, but therefore also exciting.
There's one area which I may be also allowed to make one comment that speaks about whether the central banks are still deserve the trust of people because they have not managed that very well over the past decades. And I suppose that trust is not something very common these days with all the turmoil going around the world. But the counter question is, would we trust other companies or corporations or institutions more than central banks? I think that's the test question. If you want to go more on, if you want to have Diem, we should take Diem. If we trust Facebook more, that's also an option, but that is a question we have to answer all together. Right, I think people are popping out, right? Doria. You're on
I
mute.
think you're on mute.
We have still 53 people in the room. I just wrote that if there are any more questions there, they can post them now. But I think
Or drop a note. I think
they're
that's also
dropping
fine.
out. Yes.
Yeah.
But
Okay.
thank you so much. Fascinating discussion, and hope to do it soon again.
Thank you very
Thank you,
much.
United
Many
Europe.
Thank you.
Thank you for the invite.
Okay.
Bye-bye.
Bye-bye.